This is a very interesting set of two interviews that I had with Amin and also Taufik. And these are about shares, saham. That's the Malay word. You see, I find that a lot of people like to buy shares, a lot of people like to get involved in shares, but they don't know how to do it. So these are some of the tips that I can give them, and I hope you guys learn from it. Now, okay. Now this episode 4 is very okay. Now this episode 4 is very interesting because it has to do with a topic that everyone wants to learn about. It seems, which is buying and selling of shares. This is saham in Malay. Okay, and I hope that the tips that I give here can get them started as well as. Give advice to some of you who might already be dabbling in shares but have not been able to consistently profit from this great investment vehicle. Now, when you talk about investment in shares, I think there are four types of shares in Malaysia. You can break it down to four. The first is the mutual funds by the government. This is Amanah Saham, okay? Amanah Saham, Bumi Putra. These are basically guaranteed mutual funds that are guaranteed by the government, and I think they're very good and should be part of everyone's portfolio. Then, when you go into the Bursa Malaysia, you have blue chip shares and you also have IPO shares, initial public offerings. This is where I think you guys could really make your money here, especially in IPOs. But when you do that, don't go speculative, okay? Invest in the blue chip shares that pay a lot of dividends. Now, the third one is really speculative shares. You hear a lot about this, people make money here, people make money there. Now, these are very dangerous shares if you really want to go here, and you should one day, then make sure you have a lot of experience. This is where you can make an extra money by speculating in speculative shares. And the last one is basically through unit trust. I myself think that unit trust is not for everyone, certainly not for the young people, because guys, you got to make a lot of returns in your younger years. You don't get that with unit trust, but for me it works fine because I'm looking for steady growth. I'm looking to outsource a lot of my investment opportunities because of my age. So you look at the age factor there, okay? When you're young, you're just starting out, you go to the keep your money in Amanah Saham, Bumi Putra, Tabung Haji, and all that. As you gain experience, you can invest in blue chip shares and speculation. And once you're like me, when you really start doing good because you're going to meet your maker very soon, hey, go to unit trust. Now, this is some of the rules that I have for investing in stock. Thanks to Amin for his really candid interview. I would advise him to invest in strong sectors. Do your homework because, in a share market, it's not mostly the shares, it's actually the sector. The oil and gas sector is moving down now. You might want to look at others like, telecommunications or plantations or construction. And you really, after you drill down to the sector, then only then do you go to companies inside the sector. Okay. The second thing that I have for Amin is please time your buying. Do not average down or average up. Don't buy the same number of shares or a different number of shares every month. You have to have a reason why you are going into the shares. You need to time your buying. Your buying time will never be perfect, but at least have a good reason and you will get a better average. Okay. When you buy shares, please buy shares with dividends. I think dividends are a great income tool because they kind of bring your price of shares down because they give money back to you, and this should be the way, because when you're old or get older like me, you want your investments to pay you back and not only you merely paying for your investments. Of course, when buying shares, I would suggest two things. Buy for a fundamental reason. There must be something that's moving the share. It could be some news, it could be some contract that it's won, it could be that the industry that it's going in is seeing good times. For example, we saw that when oil went up, a lot of oil and gas counters went up. Conversely, when the oil went down, you could see a lot of oil and gas counters in the Bursa Malaysia go down. Now, once you've determined the fundamental reason, please buy at key technical levels. You can find these technical levels in the report, in the star, and also the edge. And finally, always monitor your portfolio. This is active, guys. This is not passive. You can't just invest and expect the share to grow. Okay, you got to monitor your portfolio to see your performance. Of course, portfolio rebalancing is replacing non-performing stocks with other stocks. For example, if the oil and gas counters are not doing well, then why are you keeping it there? Just replace it with another counter in a sector that's doing well so that you get the most out of your investments. And when you are dabbling or playing shares, as they say, you must really make the distinction. Okay, are you investing or are you trading? Now, when you're investing, you're really looking for a long-term buy in a very good sector. You look for stock appreciation over time, and since you're willing to wait a long time, could be 6 months, could be 1 year, could be 2 years, you're really looking for a dividend income play. On the other hand, when you're trading, this is really short term. You're looking for the share to go up because of an event. And once that event happens, you have a job to do two things. Either you sell for a profit, or what you do is you take a small loss. Just don't let your losses get too big. Now, I see a lot of newbie investors make this mistake. They say they're trading. The event comes in, the share goes down. Guess what they do? Do they sell? No, they don't sell. They decide, hey, I'm just going to keep that share for a long time. It's not my investment. Guys, don't ever do this. Have the discipline. If you do that, you'll be running losses in your account. You're going to regret it, okay? Your journey in shares is not going to be very happy. So, this is just a small slide on how I pick counters. My choice for picking counters on the Bursa is really for blue chips which give out dividends. I go for large liquidity counters, things like Maybank, RHB, Tenaga National, Malaysia Airports, and all that. I'm not mentioning the oil and gas, okay, because it's very bad time. I also go for dividends and bonus issues. I really, really like bonus issues because I buy one and I get more shares. I always like that. I get more shares for the price of one. And of course, the strategy that I like most is if a share is going to be part of an IPO. I like that share too because then there is sustained interest in that share to make it go up. Now, I've also drawn here, okay, when the shares go down, guys, don't simply go and buy because it's going down. You see, it might be going down because the sector is going down. It will go down continuously if this is so. This is called trying to catch a falling knife. You buy a share when it goes down and then it goes down some more. Okay, so don't try to do this on a downswing. Rather, why don't you just wait for the sector to recover and start buying there? Okay, because then there's a saying in the market, you have to wait until a rising tide which lifts all the boats. So you look at the economy, maybe it's bad now, but hey, we know that in a rising economy, when the economy is about to recover, which guys make the most money? Banks, because then they can start lending a lot of money out to their customers. And Amin also asked me, is investing overseas very good? I say, go for it. Go, go, go. Okay. You are missing something if you're not investing overseas. For example, I've drawn a chart here from Yahoo Finance showing the movement of the S&P 500 index in New York with our KLCI. So since 2011, you could see that the S&P 500 has moved about 66% from 2011 until now. On the other hand, you see the KLCI negative 5.46%. So here's the deal, guys. If you can, please invest overseas because it's the same thing. Whether I invest here or overseas, I'm doing the same amount of work. But look, I can get much, much more if I invest overseas than here. And that's why I made quite a bit of money because I was in the bull market from 2009 to about 2014 with a lot of my holdings overseas rather than local. I only did IPOs locally. Learn this lesson. So how do you start? This is for our young friend Taufik. He's just opened a CDS account, so good. I think opening a CDS is definitely a prerequisite for being a trader who wants to get involved in the share market. The next thing I asked him to do, hey, you got to learn how to buy high probability shares that go up. And I think this is IPO. And as a Bumiputra, he can definitely register for MITI and apply IPO shares through MITI. Now, the thing is, investing in stocks is knowing about the business. If you want to be successful in the long run, you got to understand the business because this will give you the confidence to buy and keep the stock for capital appreciation. So there are two sites which I think is good if you go to. The first is the edgemarkets.com. The second is the Star Online on the business section. So for young people like Taufik, please go here and just learn, just learn the terminology they use, how they discuss the economy, the analyst report on this, the recommendations, whether to buy or sell or hold. And in due course, you will be able to master this game and be able to make a lot of good choices when you are investing. If you like a free video financial plan from our team, just share on Facebook and PM me. If you like a free video financial plan from our team, just share on Facebook and PM me.